Lots to dive into when it comes to markets today. We have another round of weak bank earnings from Wells Fargo and BlackRock. June retail sales were solid, though, seeing the markets probably trade off of that a bit. And now, Julie, we're coming up against a new read on consumer confidence. You've been teasing this report all week.
Here it is. It's better than expected. 51.1 is the read here on the preliminary University of Michigan read on consumer confidence. 50 was the estimate from economists. So remember, the reason I keep bringing it up is I'm not just pulling it out of thin air here.
I know.
This was really the report, aside from the last month's inflation report, that really put the Fed over the edge and made it decide to raise rates by 75 basis points. So now coming in better than estimated, 51.1 versus that 50 estimate could be reassuring. Current conditions, much better than estimated at 57.1 versus the 53.7 that was estimated by economists. Expectations not beating by very much, 47.3, just 0.3 of a point better. And the inflation expectations still relatively elevated, but again, a little bit better. 5.2% is the survey expectation for inflation 1 year from now, 5 to 10 years from now, coming down to 2.8%. So on balance here, a more positive tenor in this report than was expected.
Glad you called out inflation. The report's saying, quote, the share of consumers blaming inflation for eroding their living standards continued its rise to 49%, matching the all-time high reached during the Great Recession. So obviously inflation top of mind amongst households, concerning outlook. But look, then we had those June retail sales results. So it's clear consumers are out there in some capacity buying stuff.
Yes, it is indeed. I mean, I think the question is and remains, what are they buying? How are we seeing the shift around in those consumer spending patterns? And then how is that going to affect the overall pace of inflation and therefore the Fed by extension? But I think, you know, you do have a lot of Fed commentary out over the past 24 hours. Most recently, we had Jim Bullard making some comments on the tape. He's at an event in Europe, and he's talking about inflation. And he seems to be indicating that the Fed is more leaning towards 75 basis points. That's sort of been the balance of the commentary we've heard, is my takeaway, at least over the past 24 hours or so. And this number, I think, would kind of maybe confirm that.
Yeah. Now we just need some more housing data, I would say, to really put the kibosh maybe on that 100 basis point potential rate hike later this month.